You're listening to The Real Estate Talk Show with Simon Giannini and Erin McCoy on Talk Radio, AM 640.
Welcome back to The Real Estate Talk Show, your source for all things real estate. Well, Simon, I'm excited about our next guest because, of course, we always love to talk about investment opportunities south of the border. But what I really like about this gentleman is that he believes that you can generate wealth from real estate regardless of how much investment capital you have. So for our listeners out there, I mean, that's got to make your ears perk up a little bit. And he's proven it. It's not just something that he talks about. He does it. He lives it. He's helped to improve people's real estate wealth.
I enjoy talking to somebody that lives it, breathes it, knows what they're talking about, because there's a lot of people that are happy to give you their opinion. It's just worthless, and that's not the case with our guest, Victor Menasce. Welcome to the studio.
Oh, great to be here.
Now, Victor, let's tell everybody you are the managing partner of U.S. Real Estate Partners, and as well, you're the author of a fantastic book called The Great Canadian Takeover. I love the title of this book.
Oh, thanks very much.
So tell our listeners why they should get a copy of this.
Well, I wrote this book. You know, there have been a number of books written about Canadians investing in the U.S. Many of them were written prior to 2007. Of course, it's been a completely different world since then. I just really wrote about what it is that we do in our business. What are the systems we have in place? What are our criteria for investing? And how we generate wealth. We don't rely on market appreciation. We don't wait for the market to create wealth for us. We physically go and force that situation by creating value in projects.
Give us an example when you're saying that you create an opportunity, you
Absolutely.
find an opportunity. So give an example of something like that.
You know, there's lots of situations in cities where there are really hot neighborhoods and then so-so neighborhoods right next door, and we simply buy on that dividing line right where there's development taking place, and we buy on the line, move the line. We've talked about it before.
Favorite saying. We use it all the time now, thanks to you.
It's a very simple strategy. It's so simple.
Yeah.
Now, if you do one house, nobody cares. Nobody notices. You do 5, 10, and now people say, okay, I get it. That line is actually moved. It's now...
No, it's a good neighborhood.
Yeah. It's a good neighborhood. It's exactly right. So that's certainly one strategy. The other thing that's key, and it's one of those basic rules of business, obey the laws of supply and demand. A lot of people go into markets hoping to buy something cheap, hoping to get a bargain. But if you go into a market that's a shrinking city, things are cheap for a reason.
And will continue to get cheaper.
And to continue to get cheaper.
Yeah.
Go where there's demand. I'm a Canadian. I can go anywhere in the U.S. I'm not constrained by going into any particular location, so why not go where the demand is?
You're so right, because people are confused. I mean, they're tempted because you get these stories, my friend just bought a house in Ohio or Michigan, and it was, he bought it on his Visa card for $25,000. The only problem is it's a bargain, but it's not going anywhere, and you can't capitalize it. There's no income. You can't rent it out, or if you can get tenants, they're undesirable, and there's no lift.
And we've seen, for example, in the Toronto market, growth has driven value. That's been the case for years. I mean, Toronto continues to add 75, 80,000 new residents a year. That's tremendous growth, and that growth is driving the demand for new product. That's not the only place where there's growth. There's lots of growth in the southern states. We're doing projects right now in Louisiana where in that belt from New Orleans to Houston, there is a ton, and I mean a ton, of oil and gas related projects underway. There's huge influx of population. The town of Lafayette, for example, about 400,000 people, adding 12 to 15,000 new residents a year. Always demand for new product.
So tell us how you find those next places where demand will increase. We know it's because of course, job opportunities.
It's
and anywhere where there's heavy government, it's the best place to put your money.
You want where there's those economic drivers, where there's that anchor. People build shopping malls around an anchor store. We build residential properties around economic anchors. In Houston, there's the new ExxonMobil headquarters that's going to bring 10,000 direct employment, 30,000 indirect employment. So that whole area is going through tremendous growth right now. Communities like Katy, which is a suburb of Houston, it's one of the fastest growing suburbs in the country.
And this is something that you know because you're down there doing business. You're helping Canadians with their investments. So you see this day in and day out. Correct. But I think at the end of the day, somebody shouldn't go south of the border, as Simon had said, with their credit card and just go buy a deal because it seems like a deal. They really need to get the right advice and guidance.
It's a matter of getting the right boots on the ground, the right quality of team. Like any business, a good deal badly managed is no deal. So it's all about the management. Who have you got managing the project and who have you got in your team? It's really all about that. No different than any other business. Whether it's a hotel, a restaurant, a technology company, it's all about the people first. Because deals are everywhere.
There's tons of deals to be had. So I was going to ask you then, in terms of for Canadians opportunities south of the border, are they still that vibrant?
Real estate's an intensely local business. I don't really care about what's happening in a major area. Like, if you said, what's happening in Kentucky, I said, well, I don't care. It's not that important. What I'm concerned with is what's happening at those boundary conditions. Maybe next to a university, maybe next to a new hospital that's going up, or, those kind of economic hubs that are pulling population because they're pulling jobs into that local area.
Fair enough. Now, are there certain states that are what we call investor-friendly?
Oh, absolutely. Certain states have a reputation of being, for example, very landlord-friendly, and other states being very tenant-friendly. New York State, very tenant-friendly. California, likewise. Arizona, probably one of the most landlord-friendly states. Texas is somewhere in the middle. You got to do your homework, obviously. The rules change from state to state. There are great opportunities really nationwide.
If you're just tuning in, we have here with us on the Real Estate Talk Show Victor Menasce. He's the managing partner of U.S. Real Estate Partners, and he's also the author of The Great Canadian Takeover, which is such a great book. Simon, we've read it from beginning to end, and even now talking with Victor reminds us how much there is to know.
There's a great comment that it doesn't matter what's happening on a macro level, and I love that you said that, because it really doesn't. People say, how's the U.S. market? It doesn't matter.
Right.
How's the Canadian market? It doesn't matter.
That's right.
How's the harborfront? How's East York? It's literally down to that level.
How's the beaches?
And where can we find opportunity? But I have a feeling that some people listening out there say, well, I don't have the resources to really understand how to identify these areas. There's a school of thought and maybe a course of action that's almost so common now it's become cliche, and that is, look where development is going. If Walmart is coming to an area, if Starbucks is coming to an area...
They've done all the research for you.
They spent millions and done the research, because they don't open up places that have no potential customers.
Yeah, absolutely. Look where CVS is going in. Look where Walgreens is going in. Absolutely.
I love Publix, those grocery stores, just saying. Yeah. All right, let's talk about commercial real estate south of the border.
Yes.
What's going on there?
Well, there's just so much opportunity. Again, I'll focus a little bit on what's happening in the Deep South.
Okay.
In that 5-hour stretch between New Orleans and Houston, there's a massive amount of new oil development and natural gas. Just in the town of Lake Charles, Louisiana alone, a town that nobody's heard of, it's a town of 80,000 people. There are $67 billion with a B of new projects planned over the next 5 years. That's a staggering number. We're involved in projects in that community, a lot of new multi-unit residential buildings. There is so much demand in every sector, in retail, in warehousing, in industrial. If you can build industrial buildings with 20-foot unrestricted clearance for heavy equipment, you'll fill it. Doesn't matter what you build, you'll fill it.
Is this something that an individual investor, of course, can tackle, or do you have opportunities where people can amalgamate their funds collectively? We
do have opportunities, and we often bring project teams together. We occasionally bring in funding partners. We're very selective of who we work with, of course. We want them to be accredited investors, but there definitely are opportunities, and really it's an all-you-can-eat buffet of opportunity out there.
Because it could be very daunting for somebody that's just tuning in. Of course, they may have some equity in their homes, they have some extra cash that they're sitting on. They'd like to dabble, they'd like to maybe venture into south of the border, but they just don't know where to start.
Personally, my opinion, I wouldn't dive into the U.S. as your first investment, because it does require a lot of analysis, and it is a little more daunting a task managing a property from a distance. But definitely for those people looking to diversify or looking for deals that are managed by professional teams, where you're part of a syndicate, very little risk. You're investing your money in real estate. There's a strong management team on the ground, and you've got fairly predictable returns, double-digit returns, and definitely better. So that's what people are looking for.
We talked a little bit before we came on air about something else that you're involved in. I mean, you're quite the entrepreneur, and I love it that you're a Canadian boy that's down south, just really making an impact, which is fantastic. But you're also in the game of oil and gas. Tell us more.
We are, yeah. So that's another form of real estate. It is. It doesn't matter whether it's Canada or U.S. You can separate the mineral rights out from underneath the deed associated with the land, and we're negotiating land leases where we get the lease on the mineral rights. And once you have that, you can actually focus on oil production. In many cases, we're buying assets where oil wells were maybe drilled 30 or maybe 50 years ago when the technology wasn't as advanced. Many of those wells have gone dry, and some of them, we just had to wait for the pressure to build back up again. You turn on the pumps and they start producing oil again.
Again, that's right.
With the price of oil today, that's a very lucrative business. If you're pumping 10 barrels of oil a day, that's $1,000 every day. Think about a multi-unit residential building. What's the rule of thumb? $100 cash flow per month per unit? Mm-hmm. We're talking $1,000 per day. That's 60 times,
And I guess the U.S. government must be loving this because, of course, you're bringing back from the dead, so to speak, existing, oil wells or refineries. And more importantly, there is certainly a shortage and an issue when it comes to oil and gas south of the border, right?
Yeah, and it's not just a game for the big oil companies. It's really a grassroots type activity where you work with the individual landowners. Many of them are farmers. They're not making enough money selling hay or selling wheat, and so now they want to leverage some of the assets that are on their property. They don't have the cash to invest, so they're looking for a production partner to come in and get the production underway.
Victor, always a pleasure having you here. Love what you're doing, and of course, we always have you back.
Yeah, see you soon.
Thank you, Simon. Thanks, Erin.
We need to take a short break. You're listening to the Real Estate Talk Show right here on Talk Radio AM 640, so stay with us.